pessimism and optimism you are. I think a little bit more on the optimistic side.
Optimistic about the market, pessimistic about behavior.
John, you've got slides? Do you have them here? Larry, return to main here.
All right. Well, good morning. Good warm up for capital markets. But I stand up in most classes, so I'm going to stand up. That's the most natural for me. Whoops. Okay. So I'm going to talk a little bit about the credit crisis, and I decided to call it a retrospective, both because I'm going to be showing some graphs of the history over the last couple of years, and in somewhat of a hopeful tone, in the sense that going to take the perspective that the credit crisis has largely passed. Not to say the recession is over necessarily, but that the crisis in the capital markets seems to have largely passed, and I think I'm going to be somewhat optimistic in tone because of that. So let me just show a couple of graphs. This is going to pick up on something Sue mentioned, which is the easiest way to look at what was happening in the financial markets is to focus on the short-term Treasury bill rate. So the short-term interest rate the government pays, and as Sue mentioned, starting in the summer of 2007, so somewhere around July and August, you started seeing a big change in behavior. So there was problems in the mortgage markets. A couple of hedge funds at Bear Stearns had problems, and I forget if they defaulted or exactly what happened, but they started having some problems. And at the same time of August of 2007, there were some other problems with hedge funds. I think one large hedge fund, I forget who it was, had a real problem and had to start selling off lots of assets, and that sort of had repercussions because that triggered a lot of selling by other hedge funds. And so there was a lot of volatility starting in August of 2007, and you can see that it was right at that time when short-term interest rates started to come down and became quite volatile. In the years leading up to that, they'd been sort of this steady march upward without very much volatility. Right at about the same time, you saw lots of problems starting to creep into the different financial markets. So this was the commercial paper market, which was a couple billion, I'll have a slide in a minute, but had a couple $1 trillion of commercial paper outstanding in, I believe it was August of 07. And you can see right around that same time the spread between what a private borrower could borrow short-term at, which is the commercial paper market, and what the US government could, presumably risk-free assets, that spread widened and became quite volatile. That accelerated pretty dramatically in September and October of 2000.